How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. Welcome to a new month. This is September. You guys voted, and British pound versus Japanese yen has won. So we're going to be tracking GJ for the rest of the month. Some groundwork. At the beginning of any new month, I'm always using my IPTA look back data range pool. So I'm starting at the first official trading day of the new month, counting back 20 bars, 40 bars, and 60 bars, and I'm finding the highest high and lowest low in each one of those 20 period quadrants. Even the highs that have been broken are still significant because they can be acting as a old high PD array. I also mark out the opening price of the monthly candle. So this is the open of the month. Anything above is a premium. Anything below it is a discount. So if I'm looking for a buying opportunity this month, it needs to most likely fall below the opening price here. If I'm looking for a selling opportunity, it has to fall above the opening price. Sell high, buy low. That's always been the classic trading style. Some macros. So we have a bearish British pound seasonal tendency. So we'll come over here to the website that I use. So at first we get a rally up and then a decline all the way down in October. For Japanese yen, you got neutral or just carnage, just back and forth price action. And then US dollar is bearish. Now it's interesting to see that the dollar and British pound is bearish, which is something I would not prefer. However, that doesn't mean we cannot trade GJ. Another thing I would also mention is our interest rate differential between the two central banks. So right now, if we were looking at BOE, so the Bank of England, we have a rate right there, 5.25. And then we go to Japan, we can see it's still negative. So there's a huge interest rate differential. Right now, British pound is winning the race and raising their rates to fight off inflation, while Japan is not doing so. They're sticking to that tight monetary policy of being negative, which we can see has not been favoring them. Inflation is still running hot in their country like it is in other countries around the world. But supposedly with the system that they've designed, raising rates is supposed to combat inflation. Like I said, I'm not a professional. Do your due diligence, but that's what they say. Raising the interest rates is supposed to combat inflation. Right now, Japan has not been doing so, and we can see most of the yen crosses, especially UJ, has been bullish. All of the yen crosses have been moving bullish for the last couple of months now. Now, going into this month, I would also suspect there most likely is going to be some type of bullish price action because that interest rate differential is so strong. Now, if I want to see a bullish British pound versus Japanese yen, it's going to be a mouthful to say every time. I'm just going to say GJ. If I want to see GJ move up for this month, I first need to see price drop below September's opening price. I need it to raid a swing low, most likely a previous daily low or old low. So if you had to mark off something right now, it would say this going into the new month. I would like to see that low rated. Now, we do have that 20-day look back low here, which is also a swing low. We could go down there as well. Price could reach down here and then give us our bullish opportunity. However, we need to watch price action day to day to see what is going on. And if we can infer if the price action is going to turn around more recently around the break of this, or if it's going to continue to trend lower. If it continues to trend lower, I wouldn't be surprised if they buy it back around this area below this low because it's cheap, or below any low here, or just below the September's opening price. If they're going to sell, I would most likely want to see some type of high rated. So let's say the 20-day high that we have here, it's really close to price, push price above the monthly opening price, and then give us a short back down to sell side liquidity. That is another scenario we can see. Or we get carnage and prices trades back and forth and consolidates throughout this month, because we do know every month is not the same. You're not always going to get a trending month. As you can see here, just looking back, we can see here in July, price came down and consolidated for a couple days and a couple weeks. They didn't really go anywhere significantly until we got into August, and August trended up. And then towards the end, we started to cool down as, you know, at the end of the month, the volume tends to slow down and start to pick back up once a new month starts to open up. But as of right now, I wouldn't make any big guesses on where it's going to go. I need price to break something, then I react. Most likely it's going to happen in a swing formation. So if it's going to go up here, let's say it's going to go up, it's most likely going to make some type of swing low formation, then go up, break a swing high, make a higher swing low, make a higher swing high, and keep doing something along the lines like that. If it's not going to do that, it's going to either break a high, come down, break a low, lower swing high, lower swing low. And that would be the basic premise to a trend. So a bullish trend, higher swing highs, higher swing lows. A bearish trend, lower swing highs, lower swing highs. Sorry, lower swing lows. And that's what we would do there. If we had to use any other correlated pairs, I would look at EJ. I would look at AJ, NJ, because most of the yen crosses will move in the same fashion. If we also put on the DXY, so let's just say we put on the DXY, and we put same percent scale, we can see it almost tracks the dollar. I'll actually change this up. I want it to look another way. I want it to be a new price scale. You can see how as dollar is going up, it's defeating yen. Yen is getting weaker. And if yen is getting weaker and dollar is getting stronger, that would probably result in a stronger British pound versus Japanese yen. Now, if we were to add on, let's just say the yen futures, completely opposite to the dollar and completely opposite to what? GJ or British pound. We could see how as this pair is going up, and I'm not talking about DXY, I'm talking about the candles here, I'm talking about the actual pair we're tracking for the month. You can see how it's going up. We can see what? Yen is going down. So we can see there's some type of correlation here. When dollar is strong, yen is weak. And when yen is weak, we can also see other foreign currencies get stronger against it. So keep that in mind as we go along through this month. It's a little different from what we normally do for our daily updates, but I just wanted to switch it up. Not to say I wanted to test the waters, because I had someone say that in the chat. Let's change it up and test the waters. It doesn't matter what we trade. We could be trading crypto. I would have preferred to trade crypto, but we could be trading crypto, and the same thing would apply here. We'd use a lot of tools, fundamentals, technicals, macros, and even sentiment from other traders. What are the retail traders saying? What are the headlines saying in most of the big forums? What are people posting on TradingView? What are people saying in their Discord and Telegram chats and stuff like that? Read the room. And most likely, if you go against some of these people, you realize you're going to win.